Stop what you're doing. Seriously, if you hold any consumer discretionary stocks right now, you need to hear this. We all share that one massive fear right now, right? Catching a falling knife in a shrinking market. But last week, I was digging through the latest batch of quarterly earnings reports, and what I found completely shocked me. I stumbled across a company that is quietly posting incredible margin expansions while its core industry is literally collapsing around it. It's kind of like watching a ship sail faster while the ocean dries up. Welcome to The Explainer. Today we're unpacking exactly how LCI Industries, ticker LCII, achieved this massive financial growth and basically wrote the ultimate playbook on diversification.
Right off the bat, just look at this wild contrarian reality. The North American RV wholesale market, which is, this company's absolute lifeblood, dropped a painful 15% in Q1 of 2026. But get this, LCII somehow managed to boost their net income by a staggering 27%. How does the supplier actually thrive when its main industry is shrinking? Well, by the end of this explainer, you're going to have a clear, actionable framework to see exactly how LCII turned an industry-wide disaster into a massive earnings beat.
Here's our quick roadmap for today. We'll start with the RV market paradox, then look inside those Q1 2026 earnings. After that, we'll break down their diversification strategy, check out the institutional ownership, and wrap up with a look ahead at their 2026 guidance.
All right, part one, the RV market paradox and the tough macro environment we're dealing with. So the backdrop here for LSCI is a significantly softening core RV market. It's rough out there. North American wholesale towable units, they dropped by 15%, down to 73,400 units, and retail sales are taking it on the chin even harder, dropping by 17%. Now, for a company that supplies engineered components to these exact vehicles, this should theoretically spell absolute disaster for their bottom line. If the vehicles aren't being built, the parts aren't being bought, right? Makes perfect sense.
But let's jump into part two, inside Q1 2026 earnings and how they beat the odds.
Because the hard numbers reveal a truly remarkable quarter. While their core customers were ordering way less, LCI's net sales actually grew 4.3% to $1.09 billion. Net income hit $62.9 million, and adjusted EBITDA climbed 13% to $125 million. Guys, this is what flawless execution looks like when the macro environment just refuses to cooperate.
And honestly, even more impressive than that top-line revenue, they expanded their operating margin by a massive 90 basis points, jumping from 7.8% up to 8.7%. That is huge. It tells us they aren't just magically selling more stuff. They're actually operating so much more efficiently on every single dollar they earn.
So you're probably wondering, how did they manufacture this margin expansion out of thin air? Well, it was largely driven by really smart pricing actions, strategic material sourcing gains, and optimizing their footprint. They're actually targeting 8 to 10 facility consolidations in 2026, right alongside agile tariff mitigation. It's honestly a masterclass in corporate self-help.
Moving on to part three, the diversification strategy, or going beyond the RV.
The solution to this whole paradox is actually pretty straightforward. LCI is no longer entirely dependent on RVs. While their RV original equipment manufacturers' sales fell 4%, they completely offset that with massive growth in other sectors. Transportation OEM sales shot up 24%, adjacent industries grew 17%, and their marine markets climbed 11%. They've essentially built this beautifully diversified platform that acts as a giant shock absorber.
Plus, we can't ignore the aftermarket. Their dedicated focus on this segment generated a sweet 7% sales bump, pulling in over $237 million. See, they are strategically capitalizing on an expected 1.5 million RVs entering the repair and replacement cycle over the next few years. It's brilliant. They're positioning themselves to service nearly every single RV currently out there on the road, creating this massive recurring revenue stream completely outside of new vehicle builds.
And hey, even within their struggling core RV sector, they definitely aren't just sitting still. They leaned hard into product innovations. Think bifold sun decks, sleek new window designs, and pushed a mix of higher content fifth wheels to capture way more value per unit. This organic content growth means they're simply making more money on every single unit they ship, which really softens the blow of that lower total volume.
Let's pivot to part four, institutional ownership, and Wall Street's reaction to all of this. Get a load of this number. A staggering 99.71% of LCII's stock is currently owned by institutional investors. Now, in the finance world, that represents a massive, undeniable vote of confidence from the most sophisticated players in the market.
Retail investors barely own a fraction of this thing. These major institutions are absolutely piling in, bringing over $522 million in inflows just over the last 12 months. We are talking about heavy hitters taking massive positions here. The Vanguard Group holds over $323 million, followed by FMR at roughly $214 million, plus huge stakes from Kayne Anderson Rudnick and Dimensional Fund Advisors. Wall Street clearly sees the power of this diversification playbook.
Finally, Part 5. Looking ahead at their 2026 guidance and assessing the future.
As you'd expect, management is highly confident. Based on this stellar quarter, they actually raised the lower end of their adjusted EPS range to $8.75, up from $8.25. They're also forecasting total revenue to land somewhere between $4.2 and $4.3 billion, with operating margins expanding to between 7.5% and 8% for the full year.
But wait, here is the absolute most crucial point. They raised this earnings guidance at the exact same time that they cut their overall North American RV wholesale shipment forecast down to between 315,000 and 330,000 units. Think about that. They are outright predicting a softer primary market, yet they're still fully confident they're going to increase their earnings anyway.
Which leaves us with one ultimate question to ponder. As industry headwinds persist and wholesale shipments continue to lag, can LCI's operational efficiencies and this aggressive diversification playbook really continue to deliver record-breaking earnings? They've for sure proven the model works right now in Q1, but the rest of 2026 is going to be the ultimate test. Thanks so much for joining me for this explainer, and I hope it gave you a crystal clear picture of LCI's fascinating quarter. Until next time,